Oh, there's a lot of people in here. I've met many of you, but some I haven't. I'm moderating our first panel of the day, and I've got an amazing panel of guest speakers with me. I'm going to introduce them, and then I'm going to take moderator's privilege and chat a little bit for myself. Peter, did you walk off with the clicker? Okay, just checking. Yeah, nice to meet everybody. I'm head of impact and inclusion at Wagestream. So my job is to measure the social impact we create through our products and services. So I spend a lot of my time thinking about your colleagues, our members who use our product, but also working with our range of stakeholders, from directly doing face-to-face workshops with the individuals who use our products, through to running our impact advisory board, but also partnering with our employer clients and partners to make sure that they've got a well thought through well-being strategy that ticks all the boxes. So joining me today, I've got Poppie Foakes from the Retail Trust. Poppie started her professional career in psychology. She's got both a bachelor's in psychology and a master's in psychological research. I think most of you know the Retail Trust. They've been around since 1832. Is that right?
That is correct.
Nearly 200 years. Nearly 200 years, older than Canada, so congratulations. I've got Joanna Aunon. I've been working hard on that and making a mess of it, from WiHTL and Diversity in Retail. And so Jo started her career in, as a talent background, working from some well-known brands such as Hilton. And WiHTL and DIR is a collaboration community, and I think there's a number of members in the room here that aim to sort of amplify the impact of what each employer client is doing. So share ideas and amplify impact. Got Ben Harrison, director of the Work Foundation. The Work Foundation has been providing independent thought leadership on the labour economy for more than 100 years, also nearly older than Canada.
I'm used to being from the oldest organisation on stage.
Yeah,
sorry.
Yeah.
Speak to it.
And last but certainly not least, Gethin, Nadin, an author and psychologist. So we've got two people from a psychology background on our stage. I think that's telling that in the world of kind of HR, we've got a number of psychologists to help us unpack everything. Gethin's most recent book, A Work in Progress, looks at unpacking kind of the interaction of different types of well-being and also the link between productivity and well-being. And he also has a day job as Chief Innovation Officer for Benefax. And Benefax have very kindly offered that you can take a copy of Gethin's book home if you connect with him on LinkedIn, and he'll send one to you as a freebie. So fill your bags, right? So what I want to do is I want to take a few minutes to talk to you about the state of financial well-being, and really look at kind of the broad research, both our own primary research, but also market research that's gone on across a number of key themes. And the first one is cost of living. And I know we're probably a little bit bored of talking about cost of living. I feel like that was my entire last year. And I feel like everybody spoke about it. Is it done yet? But here we come round into another winter and it's kind of bubbling back up, the conversation. But I want to give a slightly different take on cost of living today. So I've got a couple of numbers to share with you. The first, 62%, that is the proportion, so 62%, the minimum wage is equivalent to 62% of the national median wage as at last year. That is one of the highest in the OECD. We have a very progressive minimum wage regime in the UK. We deliberately upweight it, and by the end of next year, it's targeted to get to 2/3, to 67%. The OECD average sits around 50-some-odd%. So we're actually doing okay at paying people. 11% represents the proportion of income coverage you get if you had 4 weeks on statutory sick pay. We're doing terribly on income protection. Again, OECD average sits at around 64% there. So punching above our weight on pay, really bad at income protection. And then to kind of layer on top of this, we've got inflation sitting at around 7.2% for the year. And it's been headline news recently that wage growth is beginning to punch through inflation, but we're still in a very high inflation environment. So paying well, not doing a great job at protecting people. We've got a great breakout session this afternoon on what it's like to live on statutory sick pay. So that's one of the 2:30 sessions that are jostling for your attention later on. The next thing, one of my favorite topics, diversity, equity, and financial inclusion. So Portman kind of articulated what he called the invisibles. So individuals who have thin file, who can't access mainstream financial products. That can be as extreme as lack of access to a bank account, or kind of more moderate, so lack of access to credit, lack of access to affordable credit, or even lack of access to savings. It can also be driven by confidence and capability. So I might think that's not for me, like our 97% of members who didn't push that £10 a month button. So I've got some really interesting research highlights to share here. The first is, it's about women. So this is the diversity, equity, and financial inclusion point. Women, we make up almost half the workforce. We're about 48% of the workforce. And yet, we do 60% of the low-paid work. Can I have a woo? You know, no, because that's terrible. And so if you have a workforce who is on minimum wage or living wage or on low and variable pay, chances are this is your diversity problem too. You are predominantly employing women in many sectors. They're doing more of the low-paid work. Women do more of the part-time work. 38% of women work part-time versus 14% of men. So anything to do with managing low and variable pay or managing financial inclusion is a diversity challenge. And the second one, so we've talked a lot about credit. You've seen why credit's on our roadmap. We think it's a really important problem to solve. Nationally, around 7 in 10 of us have a credit card. It's the most popular credit product there is. And yet within our membership, only 4 in 10 have a credit card. And that's a new piece of research that we found. You know, Joe and I have collaborated on a research briefing. It's in your take-home bags today, looking specifically at that intersection of gender, ethnicity, and financial inclusion. And that's a new finding that only 4 in 10 of our membership, of your frontline workforce, have access to the most popular mainstream credit product. And again, we have a session on that later today. So that's one of the afternoon sessions on how credit and financial well-being interact with each other. It's a bit of a competition. We've got these breakouts and we're trying to see who gets the fullest room. So, you know, make your choice wisely. And the last piece in my kind of diversity, equity, and financial inclusion category is this £19 billion in unclaimed state benefits. And so that's anything from universal credit through to tax-free childcare, through to social tariffs on your water, on your broadband. There's huge amounts of underclaiming happening. So only 3% of eligible households are getting a social tariff on broadband. 97% is being left on the table. And again, through our research collaboration, what we discovered is that individuals from ethnic minority households are half as likely to be getting access to state support compared to their white peers. So as employers, we have an ability to change that, to help people find access to these benefits. It's not just a financial well-being challenge, it's also a DE&I challenge. It's really important to talk about. And my last bucket, and I promise I'll let my panel do some speaking because they are great, behaviour change and financial resilience. So this lucky 13, this is the impact of financial stress. This is actually not new research. It's from 2014, but it's new to me and I'm obsessed with it. This is not in dollars or pounds or in days or in stress. This is in IQ points. This is the impact of being financially stressed. It costs you an average of between 10 and 13 IQ points because you're giving over cognitive power to worrying about money. You're constantly thinking about what's coming in, what needs to go out, can I afford that, should I pay this bill now, should I go without, do I turn my heating down, how am I going to deal with half term, I've got to pay for childcare, do I take a day off work, what happens if I'm sick? 13 IQ points will take you from average intelligence down to a category called borderline deficient, or if you flip it, from average up to superior intelligence. Imagine if you could increase the IQ of your workforce by 13 points overnight. Imagine the impact. And here is some of the impact. When we solve for financial well-being, when we give people choice and control and visibility, here's what we see happen. We see people work 11% more hours. We see people take responsibility for their well-being. They have the data, they have the information, and they make a really positive choice to change things. We also see 85% of people spend less. And this is a really counterintuitive finding. And I'm having a breakout session right after this on what happens when you allow people to access their own pay. And we're going to dig into that number, that 85%. Because gut feel says if you open up pay for people, they're going to spend more. They do not. They spend less. they save money, they buy things when they're on sale, they calm down, they can think more clearly, they're less likely to be impulsive. They can book something when it's, they can book a holiday on sale, they can take advantage of bulk discounts, they can save financing costs. So this has a material impact on people's financial well-being. And my last one, also a joint favorite, I would say, with that number 13, is coming back to savings. We've been doing some research with Nest Insight and the academic team from Harvard. We're going to talk about this at 3:15 today. Spoiler alert, we took savings participation up to 71% of a workforce from 16%. So we'll tell you how. Yeah. I'm super proud of that one. We've flown Jay over from Harvard to tell us, all the things that went on with that. But 16% of a workforce to 71% with a really simple behavioral intervention. So super excited to talk to you about that later today. But back to my panel. I'm gonna start with you, Poppie. Since you've got the oldest history here, longest track record, I just blitzed you with a ton of data. But what's life like on the ground for a retail worker right now?
So I hate starting with a negative, but I guess as you can kind of imagine, tough, right? We're in a sort of state of perma-crisis from pandemics, conflicts, cost of living crisis we talked about. And it has had a huge deterioration on the mental health of the retail workforce. So we do a study each year called the Health of Retail Report. And in our last one that was published last month, 80% of people who work in retail who answered it said that they'd seen a deterioration in their well-being in the past 12 months. And actually, for 90% of those 80%, that was due to the cost of living crisis. So it's a tough place to be. People are struggling they're worrying about how they're going to pay for their outgoings each month. But I think retail also has quite a specific problem, which is the rise in customer abuse, which is quite unique to the sector, and that's also fueling how they're feeling. And that is an area that we are working quite hard to try and support the retail industry on, because no one should have to go to work and not feel safe, and lots of people are. They're being spat at, shouted at, being robbed, all kind of horrible stories that we're hearing. And I think kind of the mix of that we're seeing is such an increase in need for our services. Our helpline calls have gone up with the cost of living. I guess in a kind of positive way, we're seeing an increase in retailers coming to us, and we're managing their hardship funds for them, where their colleagues are able to reach out and we're able to give them non-repayable grants for certain areas. But I think I don't want it to be all doom and gloom, because we also have seen some quite positives coming out from some of the research that we've done as well. And that is employers, so retailers, listening to their colleagues much more, understanding kind of their needs, working out kind of different benefits, different ways that they can support them. So obviously using the likes of Wagestream, but we're seeing other things such as being more flexible. So your point of a large portion of the workforce being women, often they need more flexible shifts, maybe to work around school hours. We're also, I think as M&S and Sainsbury's in the past year have introduced 4-day working week for shift workers, where they're able to work longer hours, so still be paid the same. But for that 5th day, it means that they get to save on childcare or commuting costs and all of that. And that, again, adds up, can hopefully start to save some of those savings. So it's a tough place to be, but we're definitely seeing some kind of shifts and positives in terms of being able to listen to those workers to make changes.
That flexibility piece is really interesting, because I've sort of long listened to the debate about flexible working, and it only represents half the workforce most of the time. It's those of us who are privileged to work behind a laptop are arguing about whether we should have to go to work or could I stay home and how much it costs me. Whereas the reality of life for over half of the workforce is they don't have that choice.
Yeah.
They have to turn up and go to work. And Joe, I'm really interested in your perspective on this, because you work across a wide base of clients in terms of what are employers saying, what are they thinking about, are they hitting the mark? What do you see in kind of your wide range of conversations here?
Sure, thank you. And it's interesting because obviously we work in retail, we also work in hospitality, travel, and leisure, and the challenges are very similar both. So sadly, the abuse challenge is definitely showing its head in hospitality as well. But I think what we're seeing, and ironically, COVID was the catalyst, because I don't think until COVID happened, I don't think employers really understood the kind of lives their teams were living. And I think, if there was a positive, I know that sounds ridiculous, to come out of COVID, I think that was one of them, because one organisation we worked with, they were talking to their teams, and their teams were like, I have no food. I literally have no food. And so, they were a restaurant chain, so they gave basically all the food they couldn't use, they gave it to all their staff. And it was a bit kind of peaceful in the beginning. How do we, so everyone was in COVID, this kind of piece. But it enabled that structure to have conversations with teams and employees to say, what is the reality of the life that you're living? And then the realisation as employees that they didn't realise that, yes, we have EAPs, and yes, we had, they thought they were supporting their employees in kind of well-being. But this financial element really hadn't come through. And so I think what we're seeing now with employees and employers is that understanding, and employers really building in financial inclusion and well-being into their wider strategy around diversity, equity and inclusion, and particularly linked in with their social mobility approach as well, because that's really important. So a lot of companies have focused on gender, they focused on ethnicity to try and make sure that they're bringing in inclusion and diversity and representation, but more and more employers now are looking at their social mobility and asking their teams and gathering data, and that is linked also to financial inclusion. So I think employers are coming in, they're bringing in that structure, but they're also trying to understand how more they can help. So whether it's welfare, in terms of funding or hardship funds, but also in terms of how they can support with, working with people like Wagestream to really try and do it in a much more structured way. And everybody's in a different part of their journey. We work with over 100 organisations, and in any kind of inclusion conversation, you've got the front runners who are progressive, who are doing all of the great things, and then you've got those who are, please help me, I really don't know where to start. So, and everything in between. But, I think there's a lot that employers can do that they don't know that they can do. I don't know that.
Yeah, that's really helpful. And Gethin, from the I don't know where to start point of view, you spent a lot of your career advising employers on well-being strategies. And in fact, you launched the UK's first ever financial well-being strategy over a decade ago. So kind of like, what do you see that employers can be doing in terms of how to start and how to think about what their next step might be?
So I think fundamentally, I think in my view, financial well-being is so important to the whole well-being conversation. It's interlinked with physical well-being. When you worry about money, you lose sleep. It takes over your life. It obviously affects your mental health. Very cyclical relationship between all those kind of general pillars of well-being. But financial well-being firmly sticks in the middle, even outside of a pandemic and a cost of living crisis. And I think when you look at how people are handling well-being strategies, the reason why I wrote the book is I ran 200 global workshops with different employers around the world over the last 3 years. A heavy focus of that has been on financial well-being. And everyone is aware of providers like yourselves and others and different mechanisms and benefits you've got to be able to solve the problem. But we can't continue to solve the problem, and this is the whole well-being conversation's the same, by just buying lots of stuff, and you just have a lot of providers. If you went out and bought every financial well-being provider in this space, you'd have 30 providers you'd be working with, 30 contracts, 30 relationships to manage.
You just need one, right?
Yeah. Other financial wellbeing providers are available. You can. I think you really need to focus on the things you can control and influence as an employer. And there's a big debate I won't get into here, which is about how paternalistic employers should be. That kind of keeps coming up. But fundamentally, if you look at the impact of the cost of living crisis on your people at this point in time, we are just starting to understand the long-term societal impact of that. If you look at some of the data that's come out the last couple of weeks, the number of people who are dying early, which is dying under the age of 75, have increased by 6.5% because of the cost of living crisis. Stillbirths are up because of the cost of living crisis. Huge impact on society. It's not just about money, it's really affecting people's lives. And whether you think it's your responsibility or not to be looking after the money for your people, it doesn't really matter. Because as you've said, they're coming to work, their IQ's dropping, it becomes all-encompassing. So we have to find ways to deal with that. And I think the way that we've worked with customers is effectively you take this big financial well-being subject, which is big, and as you mentioned, you have huge links with diversity. You've got an ever-changing workforce. People's needs are changing every day. Societal pressures are changing those literally overnight. And we help customers to try and boil that down into what we call employer outcomes, which is what do the employers want to get out of this? Like, what problems are we solving for the employers? And then how does that translate into what behaviours we should change on behalf of the employees? And I wrote them down because apparently I can't remember 6 things. And that is accumulate long-term wealth. So these are the kind of 6 things we think every employer should be trying to do. And however you do these things is going to be up to you and the decision you make, the resources available to you. More awareness of spending. We have some great research that came out during mobile banking. Anyone who remembers going to a cash machine and playing cash machine lottery by putting your card in and saying, do I have £10? And getting that little slip back with your balance on. As soon as we went to mobile banking, overdrafts went down because people had more familiarity with how much money they had and their spending improved because of that. So giving them awareness of spending. Understanding financial products, the guys touched upon financial education at the start, still remains a really important part. The government is clearly failing people when it comes to financial education, so the employers need to kind of step up and fill that gap. Plan for goals, regardless of what those goals are. So if somebody wants to take a year off and go travelling, why aren't we in supporting that and enabling that? You know, we live in a cyclical economy with employees leaving businesses and coming back more frequently than they ever have. So enabling someone to live the life they want and come back in work for you should be something we should be comfortable with. Hold insurance against key risks. In the benefit world in which I work, you know, there's a lot about how do we get people to make decisions now that will protect them in the future. If you look at step changes, big report into what drives people into problem debt, there's a series of pretty common life events. There's about 7 of them. And almost every one of those you can have some insurance against. So you can actually buffer against the effects of those things in your life. And then access to affordable credit, which I think, again, the guys mentioned at the start. So, you know, it's a really murky landscape to go out and find money from somewhere. I think Martin Lewis has done loads of work on this as well. But most people don't know how to find a good deal. They don't know what a good deal looks like. So allowing your people to lend money in a more appropriate way or lend money from people that are better to lend from. So, you know, I would much more the people who are lending money through Wagestream than going to a loan shark. And I think there's 3 million people at the moment with loan sharks. So you kind of just got to find better ways to solve some of these problems for people.
It was something like 7% of the population in the last 3 years have used an illegal moneylender, and 1 in 5 people meet their loan shark through work. It's a colleague. One of the biggest risk sectors is the NHS, care as well, and then anything in distribution. So if you're working in a warehouse, those are places where the England illegal money lending team is seeing kind of a hive of activity around illegal lending. So yeah, absolutely. And I want to pick up on something you said, and Ben, kind of bounce it to you, because I've been hearing a few times, you know, the state-employer divide, how paternalistic should employers be? What is the role of the government here? Because last year in the cost of living crisis, a bunch of employers jumped the gun and kind of rolled out some really great, some really great programs. Some of them lacked thought, so some of them created issues around universal credit, for example, when people got those one-off payments. What are we going to see from the Autumn statement, if you have your crystal ball available? You know, where is the line between employer, government, and individual responsibility? You know, who should be doing what, and actually, really, what should employers be doing? That's what we really want to know.
Right then, let's try and sort that out. So, I mean, I think it's a particularly challenging time. So, I mean, at the Work Foundation, we look at the labour market kind of more broadly, but also thinking about more precarious forms of employment in particular. And obviously, you know, you don't need to be that politically engaged to see that we're living through pretty turbulent political times. And I think the reality is we will see a couple of really big decisions at the autumn statement, which will impact on everything that we're talking about today. So, you know, we'll see the confirmation around the increase in the living wage. And I think that's really, really important, to your point earlier, Emily, in your slides. We're also going to see a really big decision made on whether to uprate welfare in line with inflation or not. And I think there's still a big question mark about that. And if they don't do that, if the government doesn't do that, then that will be hugely challenging for many millions of people. There is a version of the world in which they do that, but they also introduce further conditionality within the welfare system, which may mean that people find it more difficult to access that payment. I think beyond those sort of 2 very big decisions, which will have a very large impact, I think the real challenge right now is, because of the political situation the government finds itself in, we may see drift in terms of broader policy making. So the area we're particularly interested in, which I think is very relevant to today's conversation, is around, you know, the kind of core contracting and kind of employment status that many workers have, and the essential impact of that is to place a great many millions of people into insecure forms of work, essentially. So yes, of course, financial well-being strategies more broadly are very important, but actually the kind of core employment terms and conditions that people have really have a very decisive impact on then how easy people find it to manage their finances and how secure they feel. So I know one of your findings, Emily, from the research you've done is around the impact of the volatility of hours and shifts that people have and the kind of impact that that has then on their pay. And very often that's not just a problem because it's volatile, but also because the kind of power dynamic within that relationship, it's kind of one-sided flexibility, essentially. So workers very often don't have any degree of stability or certainty as to how those shift patterns might change in the future. And because the power dynamic is such, they very often also then find it difficult to approach their manager about that and have a conversation about the impact that that might be having on their financial well-being, because they fear being a part of the system that's viewed as a problem and that they could very easily be dispensed with because they don't also then benefit from core protections within their employment contract either. So we want to see big action on that, and that's a kind of a key role, we think, for government to kind of really look at the law and employment regulations and, of course, work with employers to do that in a way which is sustainable. I don't think we're going to see that in this Parliament. I think if we fast forward to the next general election and the potential of a win for the Labour Party, they're becoming increasingly clear what their priorities in that space are. So I would imagine we will see changes. And just very quickly on that final point, I think what is interesting is you're beginning to see employers try to get ahead of that change. So, for example, my understanding is Wetherspoons have quite recently just ran a very large consultation with their workforce. They were previously using the 0 hours contract model. They asked their workforce whether actually they'd like to move to a more guaranteed hours arrangement, and overwhelmingly the workforce said yes. And that's a change then that Wetherspoons have made. And I think it's sort of not talking it too out of turn, that is like a non-typical example that you might expect. It's not a B Corp or kind of an organisation that you might think of making those kinds of changes, but it's a kind of really important shift. And it's all about kind of engaging with your employees, as colleagues have said, to find out what's going on within their lives and how at the very core of your employment contract you can make that easier.
Yeah, that's really interesting. And you're right. In our research, we found that over 4 in 10 people had, work hours that varied a lot, and that the main driver of that variability was their employer. So it wasn't choice. And one of the recommendations we've put out, which is in the briefing pack in your take-home bags, is that you consider the living hours standard from the Living Wage Foundations. That includes things like giving at least 4 weeks notice of a shift pattern, just so people can plan. Because if you have childcare, or if you are looking after an elderly parent, or you've got other things going on in your life, it can become much more costly to plan around short-term, shift patterns, and actually sometimes impossible to do. And people end up missing out on work because they can't get to work. They haven't enabled, the surrounding environment to work for them. And again, we saw that was impacting individuals from ethnic minority backgrounds more than those from white backgrounds. So another D&I piece to dig into. Poppie, I want to come back to you, and I want to talk a little bit about data, because you do a lot of work to support employers in terms of what their overall strategy should be.
Yeah.
And you had some strong opinions about data when we caught up before, and how employers can and should be using it.
Makes it sound really fun, doesn't it?
We're a panel of strong opinions here, so go for it.
So I think when it comes to wellbeing, data can sometimes be overlooked. I think when you're in a business setting, data is in the boardroom a million times over when it comes to how's the business doing, all of that. And when it comes to employees and people, it's not always taken as seriously. And actually, I think there's an incredibly strong link, which I think lots of other panellists have mentioned, that if you have a happy, healthy workforce, they're less likely to be off sick, they're more productive, and you therefore have a really strong business impact in terms of the financials. And we've actually been doing quite a lot of work on that to be able to really try and link that quite fluffy word of happiness to business impact, and trying to create a kind of return on happiness. And I feel really passionately that all employers across the UK, as part of a board pack, as part of all of those board conversations, have data that links to their people and that impact on it. And what we've actually seen is that it's brilliant that so many companies have some amazing wellbeing support, lots of partners that they work with. Where you have the most traction and the most impact is when you talk to people before they even have got to a crisis point or have a problem. So there's a Deloitte report that shows if you encourage people to talk about their well-being, whether that's financial, mental, physical, before it has got to really ever a point that they need to do anything about it. For every £1 you spend on that, £6 goes back onto your bottom line in terms of improved productivity, reduce absenteeism, etc. If you do that at a crisis point, and we very much, part of what the Retail Trust is our EAP and our crisis services, but actually for every £1 you spend on more crisis services, it's £3 back on your bottom line. So if you can engage colleagues at that point where actually they're fine, they're okay, and you think you don't really need to do anything about it, you have such a bigger impact on your bottom line. And I think that's where data can come in and start to show that.
And Gethin, can you jump on that? Because I know in your book you've written about some of these exact themes around kind of happiness and the value of happiness, and also the link between productivity and well-being and that ROI.
So I think this is quite interesting. I think in all areas of well-being, the traditional metrics, which would kind of tend to be objective metrics, so that's kind of absence, turnover rates. I think over time we've worked out that they're not entirely a perfect way of measuring well-being, because the reasons why people leave an organisation are fairly complex. You could have the most progressive approach to employee well-being, but you have a manager you hate and you're going to want to leave. So it kind of doesn't necessarily tell you too much. But I'm of the belief that the individual is the best judge of how well they are at any given time. And I think particularly when it comes to financial well-being, an objective measure would probably be how much has somebody got how much have they got in savings? What does their savings buffer look like? But we know that people's relationship with money differs. I've got friends who will put £500 on a credit card and will lose sleep over that. I've got friends that put £3,000 on a credit card and will not care. I've got friends who've got multiple houses where they're buying and paying for deposits using credit cards, and they're spinning plates, and it freaks me out. But for them, it works and they feel confident. And a couple of words we've already heard today, and I think we'll continue to hear, are control and confidence. And I think if we can ask people, how in control of your financial situation do you feel, regardless of what your earnings are and how much you've got in savings, and your confidence level of making the decisions you think you need to make to be able to kind of live a financially comfortable life. That's really important, I think. So those subjective measures, I think, are really interesting. And that is us asking our people, how are you feeling about money? Do you feel in control? Do you feel confident? Do you feel happy with the support we as providers are providing? And if you look at some of those subjective measures, that's being used now as a measure of success in some really unusual places. So in economics, we're realizing that actually is household income, GDP, are they good measures of how well we are doing as a household, a family, or a country? Probably not really, in all reality. So using those subjective measures, and I think the great answer to that is I think probably everyone in the room is already doing that. You probably have some kind of employee survey, some mechanism to ask people. So you might have to adjust your questions, but the vehicle for you to do this is there. And I think if people are coming to you and saying they're happy with the support you've got put in place, they feel more financially confident because of the decisions you've made, the benefits you rolled out, whether it's Wagestream or anything else, as soon as you've been able to ask this question and get those answers, I almost feel like it doesn't matter what you've done, as long as you're getting that answer, which is, I feel like I work for an employer that cares about me, and you've put things in place that maybe manage my money better. I think that's the golden ticket to this.
Brilliant. And Joe, in terms of what's coming next for 2024, can you talk us through what you're seeing coming down the pipes in terms of employer programs and how they're kind of tackling some of these sort of sticky topics we're talking about?
Can I just talk to Gethin just on that point? Because I think we'll talk about data, and I would absolutely emphasise that. And it might seem an obvious point, but any data capture that you have to think, and back to your point, Emily, a lot of employers will jump without thinking, and do you have the position, the culture within your organisation that people are going to give you that data? And I think that's just something really key and fundamental, because if you just jump in, people are not going to give you the data. They won't trust why you want to know the data. And tying into what's coming up down the line, and my point about social mobility, we're finding that people are starting to become more comfortable in giving their data with organisations, but you have to build the trust with your employees that they will share with you, and you have to have your plan that when you get that data, what are you going to respond with? Which I know sounds so obvious, but a lot of employees will just go out there, they'll ask the question, and then nothing happens, and people will lose the faith, and they will not come back to you again and share that information. So I just think that's a really kind of key point. And I think what's coming down the line, what we're seeing, and it's not just in terms of coming purely to a financial inclusion question. We're seeing a lot of organisations looking at how they can mitigate. So we work, in hospitality, travel, leisure, retail. It is a volatile business. You get train strikes, you get things happen that your demand does go like that. And what we're seeing are organisations that are trying to mitigate that volatility, with things like they are trying to make sure that shifts are planned well in advance. They're using technology that people can access, and they can actually see shifts across different units and things like that to mitigate that. So that's what, and also flexible working comes into that point to say it is that planned space. So we're seeing a lot of employers trying to find that while still trying to manage, a demand rate that goes like this. So we're seeing that will and desire to do that. We're also seeing very much a big focus on 4-day weeks for operations as well. So we said earlier that, within the support office or head office, it's, a lot easier, so to speak. So a lot of organisations we're seeing is how can you make that work operation in front line without it causing too much of a strain on the logistics of that. And we're also seeing very much a focus on parental policies. So shared parental leave, enhancing pay in order to kind of, in terms of that controls we saw when you lose your income. We're seeing a lot of organisations seeing how they can balance that and how they can enhance family-friendly policies across not just parental leave as well.
I'm a huge advocate of shared parental leave. I have 2 kids, and each time I worked for a tiny startup and I got a statutory, and my husband worked for a lovely big company and they gave him 6 months fully paid. So we split it both times. And it's been fundamental to equality in our relationship and how we both work, we both run the household together. He knows how to look after the kids just as well as I do. And I think in terms of tackling equality, and it's kept me in the workforce, it's kept me earning. It's been invaluable to us in our little micro unit. And I think, it's not just about thinking about men and what you're offering them. Shared parental leave is an equaliser, and I hugely advocate for it if you can.
Well, if you think that 60% of low-paid workers are women,
yeah,
and I think it's still fewer than 1% of men take up shared parental leave in organisations.
It's small but growing, and we have some enhanced cover here at Wagestream, and we've had some senior leaders where men take time off, which is really encouraging to see. I'm conscious that we're sort of out of time and probably overrun. I'm going to ask everyone for one last comment, and then we'll call it a day. And Poppie, I'll start with you.
Oh, just a general
anything.
Yeah. What's for lunch?
What's for lunch? Yeah. I don't know, but it's coffee break coming up next. Any last impressions you want to leave this room full of employers with?
I just think we've kind of half touched on it, but haven't. I think for us, one of the biggest things that we see having the biggest impact is that relationship with the line manager. So if someone's got a great relationship with a line manager, they feel that they can come and have open conversations before anything has become a problem that they can no longer deal with. So whether or not that's looking at training your line managers on spotting problems with poor wellbeing, not for them to become counsellors, which I think can often feel like that's what it is. It's absolutely not that. It's for them to be able to spot signs and signpost. If any of you have ever met our CEO, Chris, he often says they believe that's the silver bullet to a lot of this. If all line managers across any organisation have that knowledge and that awareness, then that's a really key thing. And again, to Gethin's point, lots of people often leave because of poor managers. If you can change that relationship, we believe that's a really huge thing to support on anything wellbeing wise.
What a nice thing to focus on in terms of tackling such a big problem. Jo, any last thoughts from you?
Yeah, very briefly. I think as always, we always talk with our organisations we work with to think holistically. If you compart a strategy like this, you will miss all of some of the main parts about inclusion as well. And I think data again, but intersectionality, which I think our findings have really found, because if you don't get into that intersectional lens, you're not really getting to the nub of challenges, and then you can use your resources, which are finite, to really understand where you're going to make the most impact.
Brilliant. Ben?
Yeah, I guess what I would say is I think it's really important and welcome that the studies that you've done, Emily, with Wagestream really sort of underline the role that structural inequalities are playing here. So that kind of, pivot into the D&I space, certainly in our research that we've done, we know that women, those with disabilities and long-term health conditions, those from Black and ethnic minority backgrounds are twice, almost 3 times as likely to be in insecure forms of work. I think the really critical thing I just want to leave people with on that front is very often, particularly women, as we've just been talking about, but also those with disabilities and long-term health conditions, opt into more insecure forms of work with all of the impact that has on their financial well-being, because they're having to trade security for the flexibility that they need in order to manage other things in their lives. It's not that they're opting in because they see this as ultimately a beneficial and the right thing for them necessarily. Very often it's a trade-off that they're having to absorb, and that is not good for them. You see in the data coming through that very often being in that kind of insecure work can be just as bad for your health as not having a job at all. So I think that is something for every employer to think about in terms of the core contracts that they offer people.
Thank you. And Gethin, any last thoughts?
I guess the first thing to say, a plug for your product, because I think my favourite bit of your product is, unlike many others, you have the ability to generate income for people. And I think that's really important. I mean, the stats you've shown, there's lots going on in society. I think putting more money into people's pockets is a clear way out of this crisis for lots of people. But I mean, everybody in this room, I think the decisions you make for your people are reaching far outside of your organisation. I think you're changing society, and in many ways, I think you're doing that more than the government is. I think we can track how fathers are having best relationships with their kids because of the decisions their employers are making. When neighbourhoods of people, there's a great study in Australia, when neighbourhoods of people all work for a good employer that supports them, that neighbourhood starts demonstrating all these different characteristics of cooking for each other and meeting up more regularly socially and looking after each other's houses and feeding each other's dogs. So I think the societal impact of all the decisions you'll make to support the financial well-being of people is really, really pivotal. And I hope that's a nice point to end on.
What a beautiful way to end this panel. Thank you so much. Thank you.